YouTube channel. My name is Michael Mwansalioba. I'm going to take you through financial accounting, the analytical pet cash book. A pet cash book is a book that is used to enter all cash transactions for small payments where the other means of payments can prove to be inappropriate, such as cutting a check or using a debit card or other means. So we need to look at a number of factors when recording the analytical pet cash book. And for it to be called analytical pet cash book, you should understand that this is a pet cash book that has analyzed columns, a multiple number of columns that are representing or recording the various items on which money is spent. A number of things that need to be noted can be as follows, particularly that all payments before being recorded in pet cash book must be supported with the pet cash vouchers and receipts. So when you look at pet cash book, a pet cash book is maintained by a pet cashier. Okay, a pet cashier keeps a record of all pet cash transactions. For the purpose of accountability, there should be support documents that indicate or actually confirm that the money was spent on a particular item. This comes in form of a receipt, because when you make a cash transaction, a document called a receipt is given as an acknowledgement of a payment. So that's what is done. And also, when you're initiating a transaction involving a petty cash, normally what will happen is that you have to fill up what is known as a petty cash voucher. A petty cash voucher is one that is actually negotiated through the appropriate authority when seeking for approval. So these documents need to be actually present to authenticate this particular transaction. Secondly, it is highly recommended that pet cash book be updated or recorded on a daily basis in order to have accurate information on pet cash expenditure. Looking at cash being a fluid asset, it is important that transactions that are made are actually updated on a daily basis. So this is quite a good management practice that should be observed by organizations. Thirdly, balancing the pet cash book will depend on the volume of transactions for pet cash expenditure. Actually, for small organizations, you might find that the volume of transaction is low. So, and the complexity which is brought about by this pet cash transaction is quite low compared to a large entity. So in this particular regard, the period for which you are supposed to balance the pet cash book will depend on the volume of transaction. For those that are quite high, then it's better to have daily balancing of this pet cash book. For those that have transactions which are low, it can be maybe even weekly, okay, or at the end of maybe every 3 days, depending on the policy of the entity. So that's what we can say about pet cash recording. We also look at how the pet cash book is divided. The pet cash book is divided in two parts. There is the left side and the right side. The left side is the debit side, which is used to record any cash received by the petty cashier. the person who keeps the petty cash. Okay, the right hand side is the credit side. This is where expenses in the period are analyzed into various expenditure items or areas. The analysis columns in the petty cash book, which vary depending on the organization's pattern and nature of expenditure. In this particular regard, organizations who have particular areas of expenditure, so this will change from organization to organization. So hence the petty cash will take suit or follow suit. So that's what will happen. This is what we can say on the division of petty cash book. Now the petty cash book, as I've said, has got the left side. You can see the left side has the part which is going to record all the receipts, and the right side, which is the credit side, will record all the payments which are analyzed. You can see in this particular format the analysis from the total credit. You have office expenses, postage, cleaning materials, or traveling, motor expenses, ledger. So that kind of format is what is adopted generally. Okay, so we look at now an example so that I demonstrate how the petty cash book is maintained. We have this transaction for the month of June, where on 1st June there was opening cash float received from the cashier, okay, of 700, and the cleaning materials for the expenditure of 30 kwacha, postage expenditure of 25, envelopes, taxi fare, petrol for company, typing paper, cleaning material, and go all the way bus fare, visitors lunches, mops and brushes for cleaning, postage stamps, envelopes, and so on. Okay, so let's look at what are we required to do. We are required to draw up a petty cash book for the month using analysis columns for stationery, cleaning, entertainment, traveling, and postage. We are supposed to show clearly the receipt of the amount necessary to restore the float and the balance brought forward for the start of the following month. So let's look at how these transactions are taken care of. So to start with, we look at the June 1st, where we have opening petty cash float 700 kwacha. This is the float that we start with after closing probably the previous month of May. So in June we got reimbursed the expenditure so that we get back to original float, which is 700. So how do we pick that one? You see on 1st June there is cash of 700 on the receipt side. See, we have restored the float, so that is cash. Then we go look at the next transaction, where cleaning material of 30 kwacha was bought using petty cash. So we go to the payment side. On 2nd June, we have cleaning material on the petty cash voucher number 1, that is column V/N, that is petty cash voucher number 1, and that is captured under the total column as 30 kwacha, and then also analyzed into the appropriate column for cleaning, where it mentions cleaning to show that this amount from the total is actually relating to cleaning, or in respect of cleaning. So that's what we have shown there. And then we go back to look at the next transaction. We have postage stamps of 25. Again, that is a payment, so that is on 3rd June. So say stamps, and this is on voucher number 2. The serial number of the voucher from where the details are got is voucher number 2. That is showing that the payment of 25 kwacha was made, and it's going to be analyzed under the postage column 25. So we go on to look at the next transaction. We have envelopes of 10 kwacha. So envelopes of 10 kwacha, that is on June 6th. You see envelopes there. The voucher number 3, the total is 10 kwacha, and it's also analyzed under stationery because envelopes are part of stationery. Then we go on to look at the next transaction, which is taxi fare 65. Taxi fare 65. So you see under June date June 8th, taxi fares, voucher number 4. The total paid is 65, and it's also analyzed under travel, which is 65. Then you go on to look at the next one, which is petrol for company car 100 kwacha. We see that it's also on June 10, petrol, which is voucher number 5, recording 100 kwacha there, and it also goes under travel, that is 100 kwacha. We go on to look at the next transaction, which is typing paper, which is stationery, 80 kwacha. So again, on the payment side, you expect to find it recorded on June 14, voucher number 6, which was used to generate that particular transaction. The total is 80, and you have stationery 80. So we go on to look at the next transaction, which is cleaning material again, which is 29 kwacha. You go see that cleaning material on the 15th June under voucher number 7 is 29 kwacha there under cleaning. We move on to look at bus fare 10 kwacha on the June 16, and indeed on June 16 you have bus fare on voucher number 8, 10 kwacha analyzed under transport. We move on to look at visitors lunches 45, visitors lunches 45. Go to the payment side, you find should find visitors lunches 45. This is let me just on the June 16th. It's a bit hidden. Let me look at this. Okay, visitors lunches. Okay, visitors lunches. Okay, there we are. It's showing there. It is actually okay. On June 20, there is visitors lunches, voucher number 9, which is showing 45, analyzed under entertainment. So that's what we have under visitors lunches. Then we also go to look at the next transaction, which is mops and brushes for cleaning. So the mops and brushes for cleaning, that's 56 kwacha. Go to look at where is it recorded. Mops and brushes on the voucher number 10, total 56 kwacha, actually analyzed under cleaning. We move on to look at the next transaction, which is postage stamps. That is under postage 15 kwacha on the June 23rd, and indeed we are going to find it on June 23rd, voucher number 11, 15 kwacha included there. Okay, 15 kwacha. Okay, that is what we have. Postage stamps, 15 kwacha. So we have 15 kwacha postage stamps, which is analyzed under postage. Okay, then we move on to look at the next one, which is envelopes, which is supposed to be under stationery, 7 kwacha on the 27th. Indeed, you are going to have actually stationery analyzed envelopes on voucher number 12, 7 kwacha. We also have again what we have, a visitors lunch again, 60 kwacha. You find it analyzed under visitors lunch, 60 kwacha. Okay, entertainment, analyzed under columns of entertainment. Then finally we are going to have photocopying paper 95, that is stationery. We find photocopying paper stationery 95, voucher number 14. So that is what you see. Now, as I said, at the end of a particular period, whether it's daily or every fortnight or every month, you need to balance this petty cash. So that will require each column of expenditure totaled up. So under stationery, we have a total of 192. Under cleaning material, we have a total of 115. Under entertainment, we have a total of 105. So we come to get all the total, we get the totals of all columns. So if we add across on the credit side, the total expenditure for this month of June, if you add 192, 115, 105, 175, and so on, you are going to arrive at 627, which corresponds with what is indicating as the total column figure. Total column figure 627. So this represents how much we have drawn from the petty cash. How much we have drawn from the petty cash. Now, when it comes to the end of the period, in this case, we are looking at a monthly period of balancing. We need to balance the petty cash and also replenish the petty cash. Okay, we have to replenish the petty cash. Remember that according to this particular organization, let's say the policy is to maintain a petty cash imprest or petty cash float of 700, meaning that at the beginning of each particular period, we should get back to cash in the box amounting to 700. So what it entails is that you need to draw 627, which has been taken out of the petty cash box from the bank to replenish it. Okay, to replenish it. So that's what we are going to do in this particular. We cut a check and then cash it so that we get back our 627 kwacha to be reimbursement amount. So we recoup the petty cash with 627, okay, from the bank. So that's what we are going to do. So when that is done, we are going to have the bank account credited, which is giving the benefit where money is withdrawn, and the petty cash will be debited. Bank account credited and petty cash debited. So that's what will happen. Okay. So what has happened in this particular case is that when let's say we started this particular system this time around, that was the first time, means that the first payment from the bank was 700, but this time 30th June we are getting 627 drawn from the bank. So the bank account will have these entries. 1st June on the credit side, 700. That's the first time we drew from the bank for the petty cash. And then secondly, now that we are balancing up the account and trying to replenish it, we are going to again draw from the bank, not 700, but the 627 to replenish the money which has been spent. So we are going to have the bank account credited to 627. Now let's get back to look at what has happened in this particular case. Okay, so we have the total 627 here. Okay, and you can see on the receipt side on 1st June we had 700. Okay, 700 on the receipt side. Okay, so now what has happened is that we have again received the 627 on 30th June, because that's what has been claim from the bank account. 627 here. Let me just do this. 627. Initially, there was a receipt of 700 on 1st June. Now we have drawn another amount for the petty cash, particularly or specifically we have drawn again on 30th June 627 to replenish what has been spent. So when we balance this, we find that 700 plus 627 is going to be 1,327. Okay. Then on the credit side, the total is showing there is 627. Okay. So what is the balancing figure? We have balance to make it 1,327. We need the missing figure, which is 700 here. 700 here. So when you add 627 plus 700, we get the 1,327. So this is the balance carried down, which is brought down on 1st of July. On 1st of July, we have a starting point of 700. At the close of June, we have carried down 700, which is brought down on 1st of July as 700 on the debit side. So that's how we balance the petty cash book. Okay, so that's how we balance the petty cash book. So now we proceed. I've talked about this. I want to talk about the expenses. For expenses, the petty cash book is used as an cumulative book for small expenses. This is where each expense account is updated on a monthly basis, as I've said, after they have accumulated, so that we know how much each account. Let's say if you're talking about stationery, you need to look at how much has been spent from petty cash in the month. Stationery, you have 10, you have 80, you add until you get 7 there, there's 95, the total is 195. That's the cumulative total. So now means that when it comes to accounting for this, we are going to actually post to the ledger, okay, like the stationery account here. Under that column stationery, we go to the ledger, we find stationery account, and what we are going to do is we are going to credit that, we're going to debit that account. Remember, all expenses have a credit balance, or all expenses are entered on the credit of that account. So you have, in this particular case, on the credit side of the petty cash book, there is a 192. Then you go and debit the stationery account 192, and the double entry gets completed. For every debit, there is a corresponding credit. In this case, the petty cash book is credited with 192. The stationery account is debited with 192. Similarly, we do the same for cleaning. So you go and get the cumulative total for the month from the petty cash book. Cleaning materials, you're going to get the cumulative total, which is 30 plus 29 plus 5,615. That is on the credit, and indeed you come and debit the cleaning account 115. So the same with the entertainment account. The total of the analyzed petty cash book is showing 105 under entertainment, and that is credited on the credit side of the analyzed petty cash book. Here, entertainment account and an expense account will be debited with 105. Again, the double entry is complete. The same applies to traveling account. When you go to the analyzed petty cash book, you find that the total for the month of June comes to something like, let me just look at this. It comes to, in entertainment there's 45, there's also 60 there, whereas for travel there's 65, there's 100, there's 10, you come to 175. So these are what you are going to be seeing debited here. Finally, postage, there is also 40 there from the paid cash book. So that's how the double entry is done. You have the credit side on analyzed cash book for figures, the total figures, and then you take them to the account named as the heading of the analyzed cash book. In the ledger, you find, for instance, paid cash book, you debit. So that's what is done. So what is this that we're supposed to look at or take home about this? You should know that when balancing the paid cash book, balance carried down and balance brought down is the actual interest amount or float. Okay, the amount remaining with the paid cashier is normally not actually shown as part of the balance. It is therefore this means that before balancing the paid cash book, the cash payments should first be reimbursed to the cashier, then put in the paid cash box with the amount that remained. So this restores the interest to its original amount, which is the balance. Okay, so that's what to look at. Okay, paid cash payments with value added tax. Okay, what happens? Paid cash payments with value added tax. If a paid cash transaction, that is receipts and payment, involves VAT, VAT should be accounted for separately as long as there is evidence of VAT receipt. Okay, so that's a guide. How do we do it? For instance, we look at this particular example, VAT receipt and paid cash record. Let's say you made payment for 4 reams of paper on voucher number 04. The ream of paper there indicates that you paid a total of 116, and if VAT is at 16%, meaning that the VAT amount is 16 kwacha, the original cost without VAT, or the amount VAT net of VAT, is 100 kwacha. When you have 100 plus 16, you have the 116, which is the gross amount. Equally or similarly, when it comes to repairs, repairs could have cost you 232. Now, if the VAT component is at 16% VAT, then it means that you are going to account for it this way. So you have the net amount, which is 200, and the VAT amount is 32. Okay, so that's how it is done. Okay, that's how it is done. Okay, so that's how we account for VAT. Remember last time I showed you how to isolate VAT when there's the figure is VAT inclusive. I told you to use the VAT fraction when we are looking at the paid cash. Please go back to my video on when I'm looking at cash book, books of original entry, where I demonstrated how to calculate VAT when you have VAT inclusive amount. That is well demonstrated and explained, in case you are not sure of how you can separate the VAT component in the gross amount, like 116 and 232. So basically that's what brings us to the end of this particular presentation. And please don't forget to subscribe and like my channels, and look forward to more interesting videos on a number of topics. And please feel free to suggest any topic you want me to cover, so that I prepare for you, and then you enjoy your watching and listening to my videos. Thank you for listening.